Good morning, traders. Welcome to the morning update. My name is Marco, and today is Friday, the 16th of June, and this is the final morning update of the week. And let's have a look what we've got for you today. Okay, so in terms of news, well, it's pretty much all been out. So it was overnight news coming out of the Bank of Japan in terms of their policy rate and monetary policy statement. They've kept everything on hold. Um, what this has meant was that in terms of the pledge, in terms of buying the government bonds, they're going to keep that at the current pace, which is going to be roughly around 80 trillion yen over the course of the year. Short-term interest rate target held at 0.1%. That's a negative 0.1%. And they're looking to target the government bond yield at around 0%. The economic assessment remains unchanged, and it's been turning toward a moderate expansion. This is all positive for the Japanese economy. They also had some rather good news out overnight. Now, what you'll see is that the dollar strength has resumed, even though this has been seen as quite positive from the Bank of Japan, and the news regarding household consumption. This came in at 0.7 or 8%, I believe, and this was the biggest increase that the Japanese economy had seen for over 7 months. So all in all, you would expect that to have had some sort of positive impact on the Japanese currency, but it's not seen that. We'll have a look at the charts in a second. Right, let's go through to the charts. So the dollar index, as we called, bouncing off the 38.2 or the 96.40 key level. And what we saw yesterday was that the big bullish dollar index candle is actually now closed above the red neckline that you can see illustrated. So today, if we get a bullish daily close that gives us a higher close from yesterday's candle, that's a significant in terms of the way I read candles, and I'll be expecting to see the dollar index over the course of the next couple of weeks push up towards that 99.2 zone. So in theory, if that's what we're expecting, look at selling euro, look at buying dollar yen. They're the two main drivers of the dollar index, so that would be what my focus would be on. And then obviously if we're thinking like that, then on the flip side, if we're looking at commodities, we should be thinking of shorting gold. Hence the trade suggestions yesterday. So euro, you can see that yesterday's candle was a significant bearish candle. It triggered us in. We took that pretty much live when I was doing the recording, and I'm looking at this as a minimum sort of target down to 108. We do have the commitment of traders signal, where commercials are at all-time highs with their short contracts. This is a significant reading, so I expect to see a further downside here. At 108, it's definitely going to be taking money off the table because it's a significant area, and we're going to see some sort of reaction there, no doubt. If we do break straight through, then I'll be looking at adding in with alternative risk to this market on a break of 108. So let's have a look at the dollar yen weekly, and the weekly is the bigger picture in the background, where you can see the blue triangle and then price bouncing off the 50% retracement. You can see that this week's candle engulfs now last week's hammer stroke doji, and we're just breaking above the 61.8. So I envisage that this market is at least going to come up and test this upper trend line up here. And what we were highlighting over the course of this week was this 4-hour chart pattern. And last night we got our break through this zone. So we'll be now watching this particular market for a pullback into this zone to get long, and this should give us a nice potential reward all the way up into the 114s area. So there's some fantastic return available on this particular market should we get the pullback. So sterling, this is a market we're small risk in. Yesterday, during the news, positive news for sterling. The day started off pretty bearish, and it triggered all these people in. The move started going down. Then obviously through the votes for interest rates and when rates are held, there was some good news there for sterling. We saw price push up. We had a spike of roughly about 120 points. It went straight up, but it's failed to break that key resistance level around the 127.70 area. You can see we had the shooting star at that level, followed by a doji, and then today's little candle. So we're not going to count today's candle because obviously it's still in open play. But the two previous candles show serious indecision at key structure level. Fundamentally, with all the uncertainty around sterling, I would expect to see this market now take a dip to the downside. So short bias, looking to trade this market, look to sell on rallies. Dollar CAD, well, we got triggered into this market yesterday with a lovely price action off support level. We can see that yesterday's candle started bullish, but then had a little bit of a sell-off towards the back end of the day, leaving us a little bit of a wick. Now the question is, will that dollar CAD trade continue to the upside? Well, our bias remains bullish dollar, so expect to see further upside. Minimum sort of targets 134.60, and then we'll see where it goes from there. So gold, this is just a trade update. We got triggered in yesterday at 12.66. We've had a drop of about 14 and a bit dollars. It's moving very well. We're going to target the bottom of this channel. We will be coming out 100% of the position at around 1230, 1235. The reason for this is this bottom of the channel has been significantly tested, and there's been significant reactions when it's got down there. So rather than hoping that the market's going to break through this key support level, even though we are expecting short-term dollar strength and there's a possibility this could break, we've got to look at the reward, and the reward that we'll have had on this trade has been fantastic. So don't be greedy, come out at the original target price. Let's see what the reaction is, because we may be doing a stop and reverse trade going long, or we'll see if the market breaks through to go short. Okay, so that's it. It's a pretty quick roundup today from the markets. There's not a lot for us to get excited about because we're already pretty much in any trade that we want to be in. I don't want to have any orders open or pending, I should say, coming into the close of Friday. So the question is now, what are you going to do this weekend? Enjoy your weekend. Make sure you get your analysis done. If you feel that you don't have time to do your analysis properly, then please drop us an email, because we provide our expert professional analysis on a subscription basis. If this is something that you're interested in, it's called the Investor Insight Pack. Drop us an email to the one shown on the screen now. That's info@phoenixblue.co.uk. Alternatively, if you are a new trader or an experienced trader and you'd love to have a bit of a gathering where you'll meet like-minded traders that you can discuss the markets with, trading opportunities, technical analysis, macro events, any sort of economic event, anything like that, anything trading related, we're going to be hosting meetup events for traders on a monthly basis. So if this is something that interests you, before we start advertising this and you'd like to reserve a space, please drop us an email to the one shown on the screen, and don't forget to like and share and comment on any of the videos you see, and we'll be happy to answer your questions. If you've got any topics that you'd like us to cover in videos, please fire it in. Okay guys, have a great day, and more importantly, have a great weekend. Okay, bye bye.